What up, guys? It's August 6th, and for the second video of the day, we're going to break down the earnings, Q2 earnings for Callaway Golf. This is a stock that we've owned for quite a while. I think we've owned this for more than a year, and we've increased our position as it dipped down into the kind of high teens there. We have a cost basis about 18. We love this stock for the long term, but it hasn't gone up a lot one way or down the other. It's actually held up really, really well against the bear market on the first half of the year all the way up to July, right before July. So let's get started talking about Callaway Golf. I'm pretty excited about the future of this stock, but of course, before we do, please hit that like button, hit subscribe. Hopefully we get some knowledge from these videos and we have some fun. In the meantime, let's get to it. So as a quick reminder, I want to kind of tell you guys about the company itself, right? When you're buying the stock, you're investing in the business, you're taking ownership of the business, so you should know everything it does. You should know that business from front to back, all right? Financials, what they do, who management is, how they execute. You should know everything about that business, okay? But I've talked about this stock before. Please see my last video. I'll put it on over here. The link to the last video in case you guys want to see a little bit more about what the business is and the highlights and what each of these broken down are. But just as a quick summary, of course, Topgolf is the newest acquisition for Callaway Golf, okay? And they acquired this about maybe, I think about a year ago, and it was a phenomenal acquisition. They used to own only 10% stake in Topgolf. Now they're complete full owners of Topgolf. The shareholders of Callaway Golf are full owners of Topgolf, okay? We also have Golf Equipment, Callaway, that's kind of like the legacy business, that's the original business, and the Odyssey putter line, okay? They say #1 putter in golf. I don't know how true that is, but they seem like really good putters at the end of the day, okay? What I've seen reviews online on Amazon, those putters have great reviews and their golf clubs have great reviews, and these are some expensive clubs, let me tell you, okay? And then there's also some interesting stuff here going on in the active lifestyle segment with Travis Matthew and the Callaway brand, okay? The Jack Wolfskin, that's sort of like, you know, like a Columbia type sweaters and backpacks and things like that, and the OGO for some travel bags, like high-end, really resistant travel bags. Not too crazy about these two right here, but I'm very crazy about Travis Matthew. By the way, this is a Travis Matthew hat that I'm wearing, and I have a couple of those really nice hats that they make, Travis Matthew. They also have some really good combos in their store. In all honesty, Travis Matthew is a brand for dads. that's essentially what it is, okay? It's a brand for dads. I'm a dad of 2 dogs and 2 kids, so I think it suits me quite well, okay? I have a couple of their shirts as well. They're very comfortable, very nice material. So this is all definitely higher end clothing, not your Gap and things like that, right? This is a little bit higher end stuff with some good sponsors on it as well, okay? Now, moving on. Here are the results for second quarter 2022. And also, before I forget, okay, I said it was a brand for dads. Actually, funny thing, I was just reading the earnings conference call. They actually Travis Matthews actually starting a women's line, and I'm not sure if they started. Let me actually look at that right now because I just read about that. I'm like, wow, a women's line for Travis Matthew. I wonder how that's gonna look. Let's see real quick. And here's the website, and what do you know? You see here tops, layers, bottoms, shop all. Let's go shop all here. Let's see what they got going on for women's here. So yeah, so okay, some higher end stuff for women, clothing, shorts, underwears, t-shirts. So it looks like pretty middle of the road stuff here for women. I know that the materials they make, if they're the same as the materials they make for men for their sweaters, especially their sweaters are really nice and soft, very, very good quality stuff. So good that they're expanding on that sector. I don't see a lot of women kind of taken off on this yet. Maybe in their upcoming promotions or their marketing that's coming up in the second half of this year, maybe they'll promote the women's line a little bit more. But that's kind of nice to see. Okay, now back to the earnings. Okay, so we got EPS beat 47 cents versus 42 cents expected. That's a nice profitability beat. It's kind of like a slight beat. It's 5 cents. Better than a meet, better than a miss any day of the week. I will take the beat there, okay? We got 1.2 billion on revenue versus 940 million expected. That's wonderful. That's a solid beat on the revenue side. And the guidance, very slight beat on the guidance here. The fiscal year 22 outlook, the way they do the guidance is for the full year 2022 outlook, okay? It's increased. If you look at this number here, 3.945 billion, and then they versus the prior one, which was 3.935. So it's an only increase of 10 million on the lower end of the guide. The higher end of the guide stays exactly the same as before. So I think this is a very slight beat. Maybe this is why the market didn't exactly overreact on the earnings, because like I said, if you guys remember my prior videos that I've done, it's all about the guidance this quarter, all about how these companies are going to guide. And the guide, upward revision on guidance means they're confident. A downward revision or a maintaining of guidance doesn't show as much confidence as that. So you need a lot of confidence in this environment to raise guidance. At least they're raising by a little bit. That's a slight beat. I'll take it any day of the week. Now, moving on, I want to go over a couple things here. So the share price, like we talked about, 23.40, moved a little bit after hours on Friday. So that's the current share price. We own about 170 shares at about $18 a share for Callaway. I'd be happy to add under 18 any day of the week. But when I look at the price of Callaway, it's a little bit hard to discern the valuation. Let me go back here to the valuation because I definitely want to talk about that, okay? Symbol EOY for Callaway, of course. People have asked me before, why is the symbol EOY? Simple answer, the founder of Callaway was Eli Callaway, so that's why the symbol is Eli. Market cap 4.3, PE on a gap basis, and this is a little bit hard to find, 29 times. Current gap earnings and forward gap earnings are at 22 times. So against the market, it does seem pricey on these metrics right here. It is definitely more expensive than the market, but for good reason. You have Topgolf in there. You have Travis Matthew. You have a growing legacy business on the Callaway clubs and the balls and the bags. And you have a really, really nice cash-producing business there, okay? Price to sales, cheap on a price to sales ratio of 1.14. But we're going to go over these metrics again in a little bit because I think that if the guidance is maintained, if the guidance is met in the future, these are going to turn out to be much cheaper than what the market is realizing at the moment, with an expected growth rate this year of 26%. So this is a company that right now you're buying at the same revenue. Essentially, the market cap for 4.3 billion is about what they're making in sales, just a little bit under. So for a company to trade like that, if we look at another company, sort of like Dave & Buster's, Dave & Buster's carries a valuation about the same as this, in my opinion. And you're talking about a business with a restaurant and an arcade that could be easily replicated by a lot of folks, right? There's not a high barrier to entry to open a business with an arcade and in a restaurant. But how is it that you can compare a stock or a business like Dave & Buster to Topgolf, which is like a golf cathedral, compared to a arcade and restaurant play? I just don't see that. We've spoken about that on the Discord chat before. I just don't see it, okay? So let's move on. Now back to this slide right here. So we talked about the share price, and we're talking about price targets. I like to give you guys price analyst targets to show you kind of what the market is thinking. And I apologize if you can't see, but the average price target according to Seeking Alpha right here is 34.83 as far as the value of the stock. I still think this is low. I think that the real value of this business is closer to $42 a share at the moment, but the market is discounting the stock heavily, mainly in my belief because of inflationary pressures and because of lack of employment, right? And the employment landscape. Very hard to find employees. That's something that we're going to hear about when we're talking about the conference call. These guys are having a tough time finding consistent employment because there's just too many jobs, not enough people to fill them. So they need bartenders, barbacks, they need cleaning crews, they need people for the golf bays, waitresses, hostesses. They need all kinds of things for Topgolf that they're having a hard time finding, and they need to raise the wages of the people that are still there so they can remain competitive. We'll talk about that in a little bit, but essentially the high of 55 from the market, low of 21. We're pretty much there. So I was really thinking about a buy entry point for this stock, and I think anything under 22.50 it is an excellent entry point. I mean, you can't really go wrong because if you're 22.50, this stock can go to 45 like that. It can go really easily to 45, and you can double your money very easily, right? And the lower it goes below 22.50, the more you would buy. So right now, my fault is that I have a low cost basis that I do not want to violate That's just the way that I am. But I could see myself adding shares under $20 any day of the week and raising my cost basis, even though that's one of the rules that I don't like to break, to get more exposure to the stock and more exposure to the future movements, which I think are going to come in the next year or two, and I'm okay waiting for them. Okay, we see here some analysts, not only analysts on Market Beat. We have let's see here, we have 36 from Truist Financial, whoever they are, as a price target, and we have some 30s, so about 34. So I think that the Seeking Alpha and the Market Beat are around the same as far as price target increases, okay? But the market is not showing it any respect. It's treating the stock just like before it acquired Topgolf. And we talked about that in our prior video, in which we were not interested in Callaway Golf without the Topgolf acquisition, not even looked at it, because it was a stock that just pretty much maintained its price, okay? So let's head over to the conference call highlights, okay? And we're going to go over total net revenue, okay? Just over $1.1 billion, 22% increase year over year. Phenomenal, mainly driven by Topgolf and the legacy Callaway segment, which is golf clubs, balls, and bags, okay? We have adjusted EBITDA. EBITDA, for those that don't know, earnings before interest, tax, depreciation, and amortization of $207 million. That is up 26%. Quite nicely. Very, very strong numbers, okay? So talk about recession. Callaway would tell you it ain't happening here, guys. Topgolf, same venue sales, up approximately 8% versus 2019. You would ask yourself, why 2019 and why not 2021? This is pre-pandemic, guys. So they're still 8% over a normal business. They're, of course, adjusting this because they did not own Topgolf before that. But if you take the same store in 2019 versus the same store in 2022, sales are up 8%. Quite healthy number, almost double digit. Totally fine, totally good, okay? And we talked about continuous strong demand. However, this is offset by staffing challenges. So staffing challenges, again, if you ask any hiring manager for any kind of business, they would tell you it is not easy to find folks to work at your business this day and age. We have 11 million jobs available in the economy out there right now, and about 4 to 5 million people that are able to take those jobs, that are not taking those jobs, by the way. So staffing challenges, definitely understatement there by these guys, okay? They continue to impact the company and the entire restaurant and service industry. Everybody will tell you that, okay? Continued inflationary pressures all across all inputs, okay? So this is something very much expected, and this is why the market has been punishing the stock, because this is a stock or a company that can be very much affected by inflation. The price of a golf ball, the price of a golf club, the wood, the metal it takes to make these items, beer at a Topgolf or some kind of drink, the glass that those drinks are placed in, are all more expensive. They are coming down after July, but remember, this is Q2. This is not Q3. This is Q2 in the highest inflationary environment we've seen in 40 years. So we're seeing the impact there. And the EPS numbers that were given that are a beat, reminding you are a beat, are accounting very, very high inflation, okay? So again, inflationary pressure across all inputs, okay, including wages, cost of goods, okay, and they're taking price increases to offset those, okay, by raising hourly wages to make sure they remain competitive. But demand is still strong, okay, for the Topgolf experience, regardless of their increase in price, okay? And this is what we refer to as pricing power. And you probably, if you watch CNBC or the other networks, you hear that word a lot. You hear about pricing power. So they say Apple has pricing power or Microsoft has pricing power. This means that they can raise their prices and people will not object. People will still buy their products and not have pushback to their products. And in their conference call, they said, yep, not seeing pushback on our price increases whatsoever. So this is what we call pricing power. And this is why we think that the inflationary pressures should not be a factor that the street is using to punish the stock. Okay, and we know, we're good enough to know when the street is making a mistake, guys, right? So opened 2 new Topgolf revenues, one in Philly, one in California. And in Seattle, they got a new Topgolf venue format. So this is a new format where they have a big lobby with golf simulators and also a fitting room for Callaway gear. So I think this is pretty genius because imagine you go into these venues and you're going to get a taste of golf to some level, either through the simulator or through the golf bays. And this might entice one or two folks or some folks in the day, at least 10 people in a day, to say, hey, you know what? Maybe I should take up golfing, right? And maybe here I can get fitted for gloves. I can try out some clubs. Maybe I can see some bags or some shirts or some hats, right? This is something that can transform regular folks into avid golfers, which is what we need to increase the golfing population. Okay, so they plan to open one additional venue in Q3 for a total of 2 in Q3, and the fourth quarter will see the largest quarter for openings, with now 6 planned for Q3. Okay, this will reflect 11 new venues for fiscal year 2022. Man, that's incredible, okay? And the openings this year will lead to lower operating margins. So, of course, there's going to be lower operating margins, especially in Q4, because opening these venues costs a ton of money. Hiring, building, materials, the real estate, it all costs a lot of money. So we need to see the investment, then the investment pans out over a certain amount of time, okay? But what we need right now is we need more Topgolfs in the U.S. and all over the world, okay? During Q4, we will see a healthier level of marketing, okay? This is something we haven't seen before from Callaway, a healthier level of marketing, which is it's an exciting new campaign aimed at both brand building and driving long-term value. This is, on the conference call, somebody asked, I think it was a Bank of America guy, he asked about the targeting of that marketing, and they said, yes, this is Topgolf exclusive advertising. So this is something that is going to help the brand and make it a more known thing. Not exactly sure that we need to advertise Topgolf that much, because if you think about it, where's the competition for Topgolf? Is it a bowling alley? Probably not. Is it a Dave & Buster's? No. This is a different kind of entertainment. This is golf entertainment. These guys have a monopoly on golf entertainment. I can't think of any other business that comes close to this. This is another reason to own the stock. And then now to review my overall opinion. Okay, so this stock, again, no touch on the stock before the Topgolf acquisition. Not at all, okay? But now it's an undervalued growth beast, to say the least, with a wide moat and a high barrier to entry. We just talked about that. Who can sit there and open something equivalent to a Topgolf? Probably not a lot of folks, okay? Callaway will keep building Topgolf facilities in the U.S. and abroad. These facilities will remain in high demand for the next 5 to 10 years. No question in my mind about that, okay? Topgolf facilities will need time to turn profitable. Time, guys, okay? Investing is not hey, I bought Callaway and I expect these Topgolfs to be profitable in 4 months or in 2 quarters. Doesn't work like that. We need this business to build and for the investment thesis, the bullish thesis, to play out. That's what we're doing with Callaway Golf, okay? We also count on Topgolf and 5-iron to groom the next generation of golfers. This is going to bring medium-end customers to the game of golf when it's right now dominated by high-end consumers, which are not affected by inflation whatsoever. If you listen to the banks, if you listen to the financial tech companies, high-end consumers are doing quite well and are completely unaffected by the current environment, okay? We're talking about high inflation, commodities, everything, completely unaffected. By the way, those are going down. So, yeah, they were not affected, and they're probably not going to be affected in the future as inflation goes down. And then the current guidance in 2022 performance, the stock is reasonably priced right now, but if the guidance is maintained and met, the stock will turn out to be very, very cheap. Like I said, this stock can go to 40 in a blink of an eye, and you will miss the run to 40, and then after that, you may miss the run to 60. That's my opinion, but that's over a couple years of a bullish thesis. Okay, and then this was very nice to hear on the conference call. Management was confronted with the overall market sentiment of you're being hurt by inflation, being hurt by employment. Golf, how much more can golf really grow? And the management was just kind of like, nuh-uh. That ain't the case, guys. If we see a sort of lessening of demand of golf, it's going to be very, very modest, if any, and there's nothing in their data that points to a decrease in golf spending over the next whatever amount of time. So these guys are pretty confident that they will continue to grow and that they will continue to buy back stock, and profitability will be reached with all of Topgolf by 2024. So their overall sentiment on the business is money. Okay, I encourage you to listen to the call in its entirety. I'm giving you, of course, a little breakdown, but this is my opinion on the stock. Now, to kind of help close it out, I wanted to kind of go over the demand aspect real quick and just kind of give you a little tidbit here. This is August 13th. This is next week, Saturday. We're Saturday today. This is Saturday next week. These are the openings in Las Vegas for next week, Saturday, for a golf bay. We got one morning opening and one late night opening for Topgolf. The current wait time, as of yesterday when I called Topgolf, is 4.5 hours at least to wait on a waiting list if you show up unannounced to the Topgolf here in Las Vegas. So demand off the chain, okay? We need more employees to go in there and actually become employees of Topgolf so we can get more bays open and get everything banging at 100%, full engines blasting for Topgolf, and then we're going to be very happy shareholders, okay? And just out of curiosity, I changed it here to August 20th. So this is 2 weeks, the next Saturday, 2 weeks from today. We have some openings in the morning and some in the early afternoon and one late night. So again, guys, with hundreds of bays out there, these are the only openings in 2 weeks from today. So the demand for Topgolf, again, off the chain. So that's going to be for it today for Callaway Golf. We're going to talk about other stocks. Probably tomorrow, do a couple more videos on Ford and maybe DraftKings. And then we'll keep on Callaway Golf. We'll keep our eyes on it and maybe buy some more shares if we see some more weakness, sort of like we did in June, okay? If you guys have any questions, feel free to let me know. Hit me up on Instagram, Twitter, also the Discord chat. I'll drop the links below. Peace out.